Well, it finally happened, Sonu. The Fed cut interest rates. In this week's Carson's Take 5, we're going to talk about that. We've titled it, The Fed Cuts Big. Sonu, the first interest rate cut since I believe it was March 15th of 2020 just took place this week. You and I could speak an hour on this. We would put everyone to sleep, and they literally poked their eyes out by the time we're done. So we're going to make the misery last 5 minutes. Let's talk high level. In Fed cutting, what does it all mean? And let's just start there. What does it mean? Then we'll go from there.
Yeah, remember, just to back up, the Fed raised rates 5 to 5.5% to fight inflation. Historically high, the highest inflation in 40 plus years. Remember, inflation hit 9% plus.
Yeah.
In June of 2022, they took rates last year to 5.5%. And now inflation is no longer a problem. But risks are rising on the employment side. And basically, the Fed's message here is we've got the labor markets back. I think that's the message of this cut. They cut by 0.5 percentage points, taking the Fed funds rate down to close to 5%. It's in that range. And I think that's really in response to recent labor market data that has been on a downtrend, like hiring slowed, right? And layoffs, thankfully, haven't risen. But vacancies, job openings have fallen significantly. The unemployment rate has gone up. So risks are rising. Doesn't mean we are in a recession now. Doesn't mean we'll be in a recession a month or 2 or 3 months. But if the Fed didn't go big, I think they were worried they'd be behind the curve 6 to 12 months from now.
Yeah, honestly, 6 weeks ago, the Fed had a Fed meeting, interest rate decision. They didn't do anything. We were on record saying, they probably should have done 25. They could have done 25 then, 25 now. It's almost like they got the big eraser out, maybe. One of the things that I just did a study on, Sonu, is the idea of the Fed cutting with stocks at all-time highs. You think about it, normally when the Fed's cutting, bad things are happening, 100-year pandemic, great financial crisis, the tech bubble implosion in the early 2000s. But there are some other times in history where the Fed was cutting with stocks doing just fine. Like 2019, the Fed cut a couple times with stocks like virtually at all-time highs, and things were doing just fine then. So I found, using Bloomberg data back to 1980, 20 times that the Fed cut interest rates with the S&P 500 less than 2% from all-time high. I looked at the day before, so like it'd be yesterday's close. If it's within 2% all-time high, close enough for government work, pretty darn close to right about all-time high. 20 times. 1 year later, I don't know if we have a drum roll, we can add music, but the drum roll, please. 1 year later, there, we don't need to add one. Someone who's a walking encyclopedia, economist, drum roll expert, all types of things. 1 year later, the stock market was higher 20 times. Now, it's not like all of them are massive gains, but just remember, when the Fed is cutting, when the economy is doing okay, we call that a normalization cut versus cutting because of a panic or a recession. Again, Sonu, we think it's more of a normalization cut with the economy. Yeah, it grew a lot, slowed down, maybe mid-cycle slowdown here, got some issues in the labor market. Yes, issues with consumers, credit card delinquencies, and some things cracking a little bit. Yes, but overall, we're just kind of getting back to where we were a couple years ago in a lot of those cases because we were historically low levels of delinquencies and lots of worries with the consumer. But all in all, I think this is probably a bullish event, to be honest, for stock investors, and that's probably people listening to this very YouTube video, right?
No, exactly. And I think the key word is what you just mentioned, normalization. Yeah. Right? Especially because they went 0.5 percentage points or 50 basis points, as we call it, industry jargon here. Right? And there's a sense of, is this a panic cut? Right? Not really. Look, the Fed's in the business of managing risk. A year and a half ago, the risk was on the inflation side. That's why they took rates as high as they did. Right now, the risks are on the labor market side, and it's forward-looking risks, right? So, which is why they went big. They don't want the unemployment rate to go higher still, right? And Powell said that last month at his Jackson Hole conference. We don't want further cooling in the labor market. And that's why I think this cut is significant, especially historically significant. You mentioned a few times before where they've sort of panic cut, like in 2001, 2008, but they were already behind the curve, right? They weren't managing risk at the time. Whereas now they're managing risk and they're normalizing rates. I think that's positive for markets.
Yeah, no, I mean, listen, we've got just a little bit of time left in a minute or so. Let's just be very clear. We think this is a positive overall, but let's not forget the S&P 500 is up 9 of the last 10 months. All right, just like April was down. April was usually a good month, so go figure that. But we've had a heck of a run. The month and a half or so before the election, it wouldn't surprise us at all if we had some scary days, some bad news, different things. Perfectly normal this time of year, especially up 9 to 10 months. Maybe they're going to blame it on the Fed or blame it on this or that. Just for those investors out there, just be aware we've been pretty spoiled lately, and some volatility makes sense. Sonu, we have hit the road here in about 30 seconds or so. So they cut 50 now. I mean, how many more cuts are coming, you think?
They're projecting another 50 basis points of cuts rest of this year. So maybe 25 basis points in November, 25 basis points at their December meeting. But I think they hope to get to about 3.4% by the end of next year, which basically at the same time they're projecting the unemployment rate to sort of max out at 4.4%. They're expecting GDP growth to be at 2% as well. So no recession, unemployment rate doesn't go up, rates are coming down, inflation's contained. I mean, I think that's as good a picture as you can paint.
Yeah. I mean, I don't know how to paint at all, but I think if I did paint, I think that'd be a pretty picture. So with all of that, everyone, it's finally here. The Fed finally cut after a long, long time. All in all, we're still optimistic. There's no recession coming. We're still in a bull market. Are there some cracks? Yeah, there are some cracks. So that's why the Fed is cutting. The Fed is cutting to try to help some of those cracks and alleviate some of those worries. And the good news is if things change, we're going to be back next week to do it all again and talk about it. But all in all, it's your latest Carson's Take 5. The Fed goes big. The Fed is finally cutting. We'll see everybody next week. Take care. Thank you.